Hello and welcome to Finextra TV. I'm Alex Lippic, and kindly joining us for part of our Predict 2026 series is Paul Walton, UK Lending General Manager at SBS. Paul, it's a pleasure to have you here in the studio with us.
Thank you for having me. Pleasure.
Really great to see you. I'm going to start by setting the scene, if I may.
Sure.
So after recent volatility, where do you see UK mortgage lending heading over the next 12 to 24 months or so? And what will most affect access to home ownership, do you think? Let's start there.
Yeah, sure. So I think, projections around 300 to 320 billion worth of lending in 2026, which is a modest 4% increase. But actually, the battleground for mortgages this coming year will be around retention of clients. So, there's 1.8 million fixed rate mortgages due to expire this year. So it's really important that, financial services providers prepare for that and are able to process quickly and have the infrastructure to cope. And I don't think the mortgage industry this year will reach the levels of, for example, buying a wheeled asset where you can get a vehicle, you can go into a dealership and walk away with a vehicle in a matter of days. We still, average time from offer to actually moving into a home is still 150 days. So, the big transition I think the industry will make this year is how do we bring that 150 days down to something that's more akin to what us as consumers are used to.
It's playing a bigger role now in the mortgage process, but perhaps the journey isn't quite as seamless as it could be. Why do you think that is? What's still holding back that fully digital end-to-end mortgage, do you think?
Well, it's, AI relies on data. So for data within the credit decisioning process, the data's there within the bank or the building society, so it's readily available. AI can be used to help with the decision making and being able to support, how much can be borrowed, the affordability. Where we get friction tax, is what we call it, is when you step out of that journey and you step into dealing with the land registry, dealing with solicitors. Those areas still rely on PDFs. There's not readily available integration, so AI's got nothing to support and nothing to use there. So that's what slows the process down, and I think that will change. I do genuinely believe, similar to the car buying experience, DVLA went digital, a few years ago, and we all can see how easy it is now to tax a car, to transfer ownership. You can just do it online instead of filling out the old V5. Will the mortgage industry get there in 2026? No, I don't think it will, because there's just too many data silos, but it will. And I think this year will definitely be the start of that journey.
Really fascinating insight. You mentioned friction tax. I'd love to know what you identify as the biggest friction points within the mortgage industry at the moment, and how do you think new technologies will make a real difference and a real change?
Yeah, so I think I touched on it in the last answer. It's very much around the data silos. I think the friction, so we're very close to day zero offers. A number of banks and building societies are very, very close, if not already there. But in terms of day zero completions, we're a long way away from that. And it is because, again, once you step out of that journey within the control of the data within the bank or the building society, you hit that friction. There are going to be handshakes that will be shared, whether it be from a regulated point of view or from a data management point of view, which will aid that. But I think the bit that the financial institutions, banks and building societies can concentrate on is around batch processing. So, for the last 10 years I've been in the industry, the race has been to have the shiniest app, a very slick looking front end. That's pretty much done now. Pretty much, everyone's got something. The battleground really now centres around how do we speed up processing in the back end of the process, and batch processing, waiting overnight for payments to hit the account, for transfer. That's just not going to support the industry going forward. So, in terms of capital expenditure, the focus really needs to be on the core.
So you touched on a lot of the challenges and also opportunities as well. Embedded finance, it's constantly growing, constantly evolving. Do you think fintechs and alternative UK lenders are well positioned to disrupt traditional mortgage models, would you say, Paul?
Yes, they are well positioned, but positioned in a different way to what I think everyone anticipated 5 years ago, where fintechs were seen as a threat to the traditional lender. We're now seeing a pattern where traditional lenders are working with fintechs to enhance the house buying experience. And I think you've seen that across all types of credit facilities anyway. And what we'll, again, back to what I said earlier, we'll see more focus around the core platform within a bank or a building society and how to make that as seamless as possible. And then fintechs will add the digital element on top, as well as the integrations that they can bring along. So, you know, in terms of comparison websites, great example. We can all, that's already used throughout the mortgage industry now. But will it become slicker? Will it become the mortgage will come after you buy a house? Where at the moment you get your mortgage agreed, and then you potentially start looking for a house. Where you can see a journey now, where you see a property that you're interested in, and from that point you're already on the journey to having a mortgage approved as well, which is moving towards that that traditional buying a car experience that we all see today.
Sure. Sounds like really exciting stuff potentially to come. It'll be interesting to see just how that technology makes a real change. But in the meantime, it's been such a pleasure speaking with you, Paul. So I just want to thank you so much for your time.
No, thank you for having me. It's been a pleasure.
Thank you.
Thank you.